It's been an interesting and unpredictable year for many of the world's major economies. Emerging and mature alike have been experiencing divergent and often rocky growth paths. With me to discuss the major milestones over the past 12 months is James Bevan, Chief Investment Officer at CCLA. Well, James, we've seen the US economy contract in the first quarter of 2015. And of course, China has seen a massive slowdown that's jolted markets around the world. So what do you think have been the main reasons behind this?
I think the excess of credit that was created on the back of US quantitative easing clearly led to considerable indigestion in China that grew three bubbles, one in property, one in excess investment, and one in too much credit. And of course, the blowback of too much investment inevitably was deflation, and that's had a significant impact on markets.
Well, I think India has definitely been the success story of 2015 and is slated to overtake the UK to be the largest country in the Commonwealth by 2018. Why do you think this is, and who's it going to impact?
India's trajectory of solid growth will mean that it is the third largest economy by 2025. So this is part of a very fast-moving journey. And India clearly has significant strength as the world's largest democracy and is substantial in terms of its commitment to infrastructure spending, which will be part of the driver of that growth.
Well, things in the Eurozone have also really been looking up. Where do you think has been leading the recovery, or do you think perhaps recovery is too strong a word to use?
Well, do you know what I find fascinating about the Eurozone is how the actual numbers have thoroughly beaten the reasonable expectations that most analysts had held. And principal cause, of course, has been capital expenditure, far greater than been expected. So a round of applause to those companies that have determined that there is a future and they really should be investing.
So looking worldwide, where else do you see green shoots? I know that Korea has been mentioned quite a lot.
I certainly share the optimism for Korea, which has obviously a trade surplus, it has a strong capital position, and it has world-class companies. When one thinks about companies such as the Samsung Electronics of the world, these are companies that are capable of coping in extraordinarily deflationary conditions and still providing strong shareholder returns.
Well, oil prices have also been leading the financial news agenda over the past 12 months with low prices, of course. So where do you think have been feeling this most strongly, and do you think this is set to continue in the coming 12 months?
I think there are three issues associated with the extraordinarily low price of oil. First off, obviously, the oil companies themselves and the related industries. So we still have BP making capital investments in anticipation that we will get back to a crude price of $60 a barrel. That seems to me some way off, and therefore not a bet that I personally would be taking. The second issue is that clearly the shale industries in the States have been feeling the pinch, and this has shown up in the credit markets where spreads in high yield become exceptionally high, and there is now a real risk of default among some of the issuers of that debt. The third issue, of course, are whole economies that have been dependent on exporting fuel in order to be able to make money. The flip side, of course, is there are real beneficiaries of lower oil prices. So the average US household is about $1,000 better off per annum on the back of the lower fuel costs.
So what do you see happening in 2016 when it comes to oil prices? Surely it can't go much lower.
The real challenge for the oil price in 2016 is the interface between supply and demand. We know that Iran will be pumping more oil. What we don't know is what the Saudi response will be. And my expectation is that somewhere during 2016, Saudi will come to the table and try to move the oil price back up to around $45 a barrel.
Well, talking of Iran, sanctions, of course, have been a huge part of the world's economic mix over the past 12 months. We've seen in Russia sanctions have been tighter, and as you said, in Iran, they're soon to perhaps be lifted. So who do you think will be the winners and the losers out of all of this?
I certainly think that the traditional and developed economies have the greatest to gain because they have hungry consumers who enjoy importing goods and services at cheap prices, which has been part of the reason why we have been able to sustain what growth we have had. That said, I think if you were to look forward as to what the emancipation of global capital would mean, it's clearly a big positive for Russia, although I do say it's too early yet to invest in that economy.
And terrorism has also been a huge part of the economic agenda. Talk me through the main points.
Well, there are two aspects to the terrorism agenda. I mean, first of all, what is going to be the policy response, and what is the risk that the free movement of people, goods, services and capital across Europe is constrained on the back of these manoeuvres? It's an open question. I, for one, believe that Europe will come out the other end intact impact in terms of the free movement of people, and therefore this problem should not be overstated. In contrast, I do think that we are in for another period of prolonged human misery in the Middle East and in Syria, and we just have to accept that that's reality and respond to it.
Well, finally, moving towards 2016, what do you think businesses should be most aware of then?
I think that the interesting challenge for businesses is the real capacity for inflation to move up. We have all anticipated that inflation will remain low, but if you were to lift the lid on what's going on with core inflation, in other words, removing the impact of food and energy pricing, quite suddenly one can see a much higher inflation outlook, and reasonably we could have US inflation back to 2 percentage points in 4 to 6 months.